And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time, top-down analysis style, breaking down the chart action, the potential moves that are happening in the market that day, looking at key levels like support, resistance, pivot points, giving you guys all the analysis on that, and also breaking down all the news behind the market and identifying themes, stories, individual corporate news. And we got some earnings roundup here today on that front as well. So yeah, we got a lot to break down, a lot to unpack one step at a time. And today we've got Coach Greg here to join us to help us do all of that. Greg, let's bring you in here first off. How you doing today, sir?
Yeah, not so bad. It's a beautiful day. Markets are looking good. No complaints from this guy.
Can't complain too much about it. I mean, the market did take one on the chin at the open, actually, a little bit. Looks like it wanted to sell off there intraday. It did battle back and come right back up, charging up towards resistance points. We got a little bit of a chop back and forth there on that front, a little price action where there was profit taking. But here we are pushing towards a breakout, pushing towards an all-time high, no doubt. Greg, can't really complain about that. A couple things I want to do before we get into the analysis, though. Number one, as you're coming on into the channel here, put in hashtag Team Tackle in the chat. It's our official hashtag that we have here at Tackle Trading, represents our community. What we mean here, what we really believe in here from a value perspective is community first. Learn, trade, connect, and succeed together is our, kind of our tagline there, Greg, and that's what we're going to do right now. Number two is if you're brand new, make sure you click subscribe and click the bell. We do the show every day. You get a lot of value out of it. You'll have a lot of fun with us, and you will learn a lot about markets by coming in, putting that butt in the seat, and then coming in and learning from the coaches daily. So make sure you click subscribe, click that bell, and come back and join us. All right, let's get right down to business, Greg. S&P pushing towards an all-time high here. Give me a read on the technicals that you're seeing on the SPY.
Yeah, there's really not much you can say about this. Ran up to an all-time high, little breather, held the 9 the whole time. It hasn't even really threatened it. Within the last 4 or 5 days there. Little rundown, like you said, intraday today, looking at a 15-minute chart here, cash open, pushed it down, didn't last long, 4 or 5 candles on the 15-minute chart and back up to that resistance we are. So really the story here is just waiting for this break here. But a lot of resiliency as far as I'm concerned showed this was a pretty impressive move off the bottom here as well. Pretty decent run here. This little little stop here, this little pause, I guess is the best word I could think of. This little pause here has been met with buyers pretty much every other day. They're throwing a red candle. The buyers are still stepping up. So really looking forward to this break back above this all-time high.
Yeah, last week we had a little hesitation, a little pullback there. Whether you want to say that as a flag or a pullback depends on which index you're looking at. And it didn't really come down that far off the top. 3 or 4 candles there, though, so probably a retracement. Back into the 9 EMA, rising 9 EMA. We started Friday with a nice green candle, but then this week, Greg, we've really been back and forth, back and forth, back and forth. I love that line you have there on the SPY, and that it represents that breakout channel, breakout point. If you go to an hourly chart, here's a good intraday time frame I like to use to help me identify swing trading entry points. And you can see this very clearly on the hourly chart. Potential breakout, if we can catch that, even heading into a holiday week, Greg, I think you got to be excited about the bull side of the market if you do clear that resistance, right?
Yep. Yeah, it's I like this. If we look at this, I was just trying to draw some circles here. Touch there, another touch right there. Can't seem to do that very well today. Another touch right here. So we're sitting here, we're pushing up hard against this level. This is the break we're looking for. Once we get above there, that's your breakout level for sure. It's really super clear here, even more so than we were seeing on the shorter time frames there. So I don't think you can argue with it. I think back to my earlier points on this one here, though, the fact that this did pull back to the 9 there, the 9, typically we're looking at momentum there. As far as I'm concerned, even this pullback here, the fact that it closed above that 9, our loss of momentum really hasn't, as far as I'm concerned, in a general sense, lost. So like you said, really kind of resilient so far.
Mm-hmm. Let's take a look at all 4 indexes if we can there, Greg. Start with, maybe the Nasdaq, the Dow, either one doesn't matter to me. You can flip through them, but give me a read on the Dow, the Nasdaq, and the Russell. Then we're going to have a conversation about them, okay?
Yeah, obviously the Nasdaq strongest of the bunch here, breaking out today. Just this looks a lot like the S&P 500, only it's kind of front running it, right? So tech's been pretty good recently. We get some earnings today that would be pushing this. Yeah, it's just like I said, it's kind of front running everything. But this pattern, like I could overlay the S&P 500 here, and it looks almost identical. Again, now it actually closed a couple of days below the 9, but it didn't stay there. And the last 4 days, as you kind of mentioned there, yeah, we had a couple of red candles there, but you'll notice that the lows of the candles are still getting progressively higher. So it's still moving that goalpost, moving that forward on that one. So those are looking good. Your Dow, a little bit different story here. Obviously not as strong as the other two. Very interesting spot where we are right now, as far as I'm concerned. Drove it down pretty hard today. The buyers have come back in, and now we're waiting to see if it'll hold this 20 MA here. If it does, then you could talk about this as a retracement. If it doesn't, then I think you've got some, you've got a fair bit of drop here, probably 355. Secondarily 350 if it decides to fall, but it's lagging, which is it's been doing that for a couple of weeks, and nothing has really changed with the Dow.
Stay on that for a sec before you move on.
Yep.
Stay on that for a sec before you move on, because I think that lagging nature of it somewhat is due to the price action in one specific company here today that had earnings. Take a look at Cisco. I'll give you the numbers a little bit later. In fact, might as well just talk about them right now. Let me find them. But take a look at this gap down on Cisco, obviously a big Dow component. When you only have 30 companies in an index like the Dow Jones Industrial Average, one bad day in one company can really even shift a pattern right there, Greg. So a little bit of a gap down on Cisco here, impacting that Dow Jones performance here today.
Yeah, 100%. Yeah, it's not like we have the Russell 2000 or the 500 in the S&P. 30 companies is not a lot for an average. So definitely getting beat up. This is what, almost 8% down today. So yeah, not really that much of a surprise. But even looking at that, and obviously that's going to have a little bit to do with this little gap down here. If we go to that 1 hour chart here, kind of look at this intraday here, it did get pushed down, but it's fired back pretty solidly even after that kind of push down in Cisco there. So I'm actually happy with the response here, and what I find very interesting here, and I just drew this line, and of course my lines are arbitrary like anything else, but the reality is this old resistance and this new support are also coinciding with the 20 MA. So I think this is at an inflection point for the Dow here. We're either going to get this move up here, or obviously we're going to push lower. And that's kind of the point I was making, that our next support level would be here. And then below that, we'd be looking at this old resistance back here. So I think we're at a very important point, but I'm really happy to see this fire back here on the Dow, even after Cisco being down 8%. So.
Absolutely. All right, let's keep working through these indexes if we can. Nasdaq pushing for the breakout, S&P potentially a breakout, Dow and the Russell kind of underperforming here, but the Russell is in a very interesting zone here, Greg. You've broken below an intraday pivot, but really that's just a nice retracement back into old resistance on the daily chart. And everybody who trades the Russell identifies the Russell on the IWM contract, it's 230. On the RTY futures contract, it's 2,300. Is this area that we're in right here, Greg, that is potentially a new catalyst point, but we're still on a red candle today? What are you seeing in the chart?
Yeah, so again, much like the Dow, this is at an inflection point. Now, this one comes from a really strong breakout there, retracing down to the 20 here. But the 20, I don't think is as much of a story here as it was for the Dow. I think the 20, sorry, I'm thinking RTY here, but say the 234 level here, I think that's really ultra important for the rut here, just because this is the old channel. We got the resistance here. So four times this thing's touched this level before it decided to break out. So I think this is still a really important point here. The question becomes does it fall back into this old range, or does it push up and start its own potentially a new range that it trades in? So I think it's very, very important, spot where it is right now. They tried to run it down through here, obviously, like the other indexes. The buyers have stepped in a little bit here. And right now they've got it above that 20 MA. So the only question I have is does it hold above the 20 MA? Moreover, does it hold above this 234 level in this particular ETF here? So yeah, not really a surprise to me, really, this pullback, but it would be a surprise if it kind of failed here. I think that if it's going to hold, it's probably ready for another push towards that 244 there.
Well, and even if it does not hold, if you kick back to the weekly chart, because there's a couple things happening here. Number one, you may not get the signal you're looking for on the daily. You might not get the signal you're looking for in the short term. But I think long term, you have to be excited or interested in what is happening here on the Russell 2000. The longer the base, the higher in space. That's something Coach Tyler talks about all the time. And it's something, the way that I always describe this, Greg, it's like you're in the backyard in July and it's a hot summer day and you want to spray your brother with the hose. You kink that thing up, right? You get all that pressure backed up and then you just kind of let that thing loose and then boom, it goes, right? Same thing here. We had a long period of time where that hose was kinked. There was nothing going on. There was no water flowing through it. Now we've let it out. Now it is broken out. We've come back. It's developing into a potential uptrend here. It's still early in that process, but I am excited about small caps heading into the end of the year personally. It's just how do you navigate the daily? You got to wait for the signals. You got to wait for that stuff to actually develop and give you the right signal. Yeah.
Yeah. So even on this weekly, look at all the touches. We actually got 5 or 6 touches here on the weekly chart. So that even, that even lends more credence to how strong this level could potentially be. It was resistance. It could be support now. And as Tyler said, higher in space. Well, definitely if this holds, then I think we get a move back up towards that high. So.
Yeah, sure. A couple of sectors grabbing my attention here today, Greg. Let's start with the XLY if we can. Retail is coming into focus. We're going to break down Kohl's earnings, Macy's earnings, but just look at that strength and give me a read on that chart if you can.
Yeah, so very strong. Look at this run here. This run was incredible. I would almost put it right in the parabolic neighborhood, but it didn't even bother testing the 20 here. So pullback kind of found its legs here. Nice rounding bottom. I really like where this is at. This is looking very, very very nice here. I'm not really too much worried about this candle here. I think a breakout above 211 still works pretty well. I don't think you can argue with strength. The old Jesse Livermore, don't fight the tape. You can't fight this. It's just showing it's too much strength. It's nice because the moving average got with this little pullback here, we're able to catch up a little bit. So another run here looks pretty good to me. Looking at a weekly chart, this thing just looks like a juggernaut, high basing on a weekly. I think we're looking for more upside in this one.
I think we're looking for more upside as well. Obviously, we had the beautiful run up. That a lot of that was Tesla, by the way. Take a peek at a couple of the biggest components here. It's an interesting sector because you're so heavily weighted at the top, and that's not uncommon with other sectors. In communications, it's Facebook and Google. In tech, it's at all Microsoft and whatever. You've got these names that are going to heavily weight different sectors. But look at XLY's biggest components. Look at TSLA. That huge breakout and run, well, Tesla was driving that a lot, right? And actually some of this pullback here that's happened recently was also a lot of Tesla as well. But look at Amazon here, Greg, AMZN. Amazon is an interesting case study because, man, that thing was looking ugly there for a bit. It was neutral. It broke out. It looked like it was ready to run and take off. It had a terrible quarterly earnings report in July, put it into neutrality for a while. But now we're recovering. Now we're improving. I know Goldman Sachs named it one of its top picks here just yesterday. But even from a technical perspective, we're breaking out. And a lot of this is on the backs of that strength in retail, Greg, as supply chain issues kind of dissipate just a little bit here. It's giving optimism to investors and traders that the Christmas season might actually be jam-packed with consumers swiping that credit card online and actually getting those purchases. Amazon looking good. You got to like that breakout here. What are you seeing in the chart yourself?
Yeah, it's impressive, right? Up 3% on a $3,600 stock here. That is an impressive move. I don't really even have that much analysis on this because honestly, I left once the gap down on the last earnings there or second last earnings on Amazon there, I kind of left it alone off my watch list.
Sure.
but it's really made a pretty solid comeback. You've got all the moving averages lined up here for a run. It's real solid. I really like this level here, the 35.85 there. If you miss this pop, I would even be interested in a pullback to that level before it gets back up to this high here, if it doesn't decide to go all the way up. But yeah, again, showing strength, right? Like you can't really argue with the impressive breakout that we see today.
You think Amazon's impressive? Look at Home Depot. You were telling me before the show that you were in the Home Depot the other day. That thing blasted out on its earnings this week, and it's been a week of earnings in the retail space. These type of companies, consumer cyclicals, those names. Lowe's took off, Home Depot took off, XLY improving, Amazon improving. Man, you got to like discretionary right now. You got to like discretionary right now. And by the way, if you guys are ever looking, you said something a minute ago, made me think of a heat map. In fact, can you flip over to finviz.com for just 1 minute if you would? Heat maps are potentially my favorite thing, on Finviz, because of the visuals. It just visually will show you where the strength and the weakness is in the market today. And my eyes go here first every morning. Amazon, Home Depot, Tesla, look at tech up there, Nvidia strength, Microsoft strength, Apple strength. And as you backfill and dig into your top-down analysis, you realize this is where the conversations are happening. This is where the anticipation is, and the charts are also improving as well. Greg, I love heat maps. Do you love heat maps as much as I do?
Yeah, I actually use these things quite a bit, obviously to get an overall view. The heat maps I like the best, actually, and just something I always use here is for the earnings. I love the heat map for the earnings date, right? Because this way it gives me a whole bunch of information. If I've got some of these companies in my portfolios, sure, I know what's coming at me just by color here. So I find this thing to be fantastic for that reason. And then, yeah, you've also got performance metrics here. Like I said, if you were looking for the hot sector, you could look back the last week or so. It's gonna save you some time on your charting, I think, using the heat map. So yeah, definitely an awesome tool.
I agree with that. XLY, the kind of the star of the day here today with the strength in Home Depot, Amazon, Tesla, those other names recently. The chart also improving. A couple other sectors I did want to highlight here, Greg. Xlbs has a nice retracement developing here, and this has been one of the top performers for the last month and a half. You see how it's come up off the lows there from early October and really just taken off. Give me a read on the chart, and I'm going to give you a stat here in just a second, but give me a read on that chart first if you can.
Yeah, wow. Again, we're seeing lots of strength here in the market. Breakout, hit 90, round number, not that surprising there. But yeah, textbook pullback, 4 days here, just trying to hold that 9 or that old support here. Yeah, this is something I think you got to pay attention if it gets above that 89 again. I think there's a move here for sure. Basic materials, you're looking at a lot of strength lately in these areas. Like, look at this run here. This run is epic. You know what I mean? Couple of little breathers on the way up, but really you're talking a price movement from 79 to 90. That's pretty impressive for this index, right? So not really all that surprised. Again, see this pull back, got some old resistance back there. So whether does it hold here, does it get a little bit deeper? Either way, I think this is something that needs to be on your radar for sure.
Just quickly checking the chat over here, and I see a lot of our Team Tackle members. Great to see you as always, guys. And Marie Stankus, somebody that I mentored one-on-one and have known for many, many years. Marie, wonderful to see your name. Happy Thursday to you. And the Theta Queen is making an appearance there in the chat. Always great to see you, Marie. Hope you're doing great out there in Texas. By the way, the stat I wanted to share with you on materials, because that is a beautiful 4-candle pullback, red candle, red candle, red candle, red candle. I like simplicity in the visuals, Greg. Those are the way I like to approach trading and all that kind of stuff. And even when I'm teaching concepts, I love that consistency in the way that pullback is developed. Materials was the top growth sector from this A grade earnings season. I also asked Coach Matt on the podcast on Monday how he would grade the earnings season. He said, okay, from a numbers perspective alone, I would give it a B. From a price response and numbers perspective, I'm giving it an A. And materials might have been the top performer, quite frankly. It took up all the way through October, run. Nice little retracement. I think it's an interesting one to keep an eye on moving forward. All right. Other sectors, honestly, just tech, but we already highlighted that with the Nasdaq analysis. Let's move into commodities next if we can. Let's start with gold, moving from materials right into gold. Give me a read on this chart here, Greg, because it's developing a little bit of a high base, in my opinion.
Yeah, you can see I already had some lines here on this one. I was expecting a little bit of a pullback here to this old breakout level around 1830, 1835 here. Didn't materialize. So what that tells me is gold's holding it own here. It's building up some energy, getting these moving averages to tighten up a little bit, and just building up for that next breakout. This is an old support and resistance level from back in June there. So yeah, I really actually, as a bit of a gold bug myself, I really like to see this high base here. You're just waiting for this break here. I think 1900, I would say actually 1910, 1915 would be in play as a next target here. You've got a bit of free air here if it gets by here. So great response here from gold. A little bit up and down, but that's okay. That's gonna allow these, like I said, that's gonna allow the energy to build, and it's gonna allow these moving averages to catch up. Because the reality is, if you get the price action gets too far away from the moving averages, it's going to revert to the mean. Obviously, that means always moving, but you really want to get those together. That's where the energy comes. You can actually see where they tightened up here, and then we had a big price response after that. So, yeah, like I said, as a big fan of gold, I love to see this pattern setting up like this.
I do as well. Yeah, you have to really like what's happening there from a price response perspective. And, materials showing the strength. Gold broke out recently. There's a lot of anticipation and opportunity in some of these spaces. And one of the charts I looked at the other day, Greg, I want to get your take on it, is XME, because GDX is a wonderful product that a lot of people already, invest in, trade in, they focus on. XME is a little bit different, and it's actually more about metals and mining companies specifically, and has a little bit different composition to it. And it's got a nice little pullback developing, but it's not really a clean technical pattern. Greg, simple question. I threw it out to a couple other coaches earlier this week. Do you think we need ultimately to get a breakout here for an opportunity, or is this retracement an opportunity to you as well? What are you seeing here in the chart?
Well, it's whenever I have to make that decision between a breakout and a retracement, it becomes about the width that I think the move's going to be. So for me here, I don't really want to get involved unless it's above the 9. So we're looking at about 45 and a half there, up to say 47 and a half, $2 move there. Our ATR is 134. So I think you can play the retracement. I know I would probably play it. I would probably maybe look even at an intraday time frame to enter a trade like this. Yeah, I think this would be something for me, at least. Looks like it's bouncing off the 50 real nice there. I might leg into a trade like this. That's one of my favorite types of ways of trading here. I think if you leave this for to the breakout, I think you're leaving a little bit on the table here, to be 100% honest with you. So I think entering maybe a smaller part position here would be great, but ultimately you do want that breakout up there. That would be ideal. So
couple of different ways you could trade this then. Obviously a little leg in, scale in type situation could be in play there. You got to find your intraday trigger, then map out the ultimate what you're going to do with it when it does break out. I like it. I'm interested. It's a product I trade, and I'm interested in what happens next with this one because of the strength of materials, specifically in gold and some of those miners. So, all right, moving through here, crude oil. A lot of chatter recently about crude prices, all that kind of stuff. Well, crude price down a little bit here over the last week or so, and we broke back below 80 and broke back below some of these moving averages here, Greg. But anytime you pull back off of an ultimate high, you've got old resistance, you got old levels that it could come into. What are you seeing here from a chart perspective?
Yeah, I expected actually, well, expectations I don't think is the right word, but yeah, I was kind of thinking that it might try to hold this 80 there. It didn't. Push back down. The 50 doesn't seem to matter to it right at this point in time. The next real support level, as far as I'm concerned, would be about 75 and a half, 76 there. Yeah, I really, kind of an old M pattern there that failed. I don't really think there's much to talk about here. The OPEC meetings last week, they basically were standing pat. without that extra influx into the supply of it. That's not happening in now until December. So some of this might already been priced in even before that meeting. But just from a technical perspective there, I think you got to respect this old resistance and support here as well. So I'd be keeping an eye on that 76 level there. Looking for a bounce. I still think oil is going to be okay going forward, but we might get a wider range here for a little while. So I think that's an opportunity as well. If it does hold this old support or old resistance back here, look at the size of the movement that you've got to go here. So these deep retracements do offer some advantages to them.
Well, and crude pulling back as the dollar's breaking out, there's an inverse correlation there over the history of time, and so I understand it. And by the way, crude has had an incredible run this year, so I don't think anybody's complaining if it pulls back a little bit, but do not be surprised if it just finds some support at some point, shoots back up those charts. I still, in my head, Greg, believe crude has a very good probability or likelihood of touching $100 at some point in the next 6 months or so. So I'm still looking at upward price appreciation over time. Those weekly charts are in line. These levels are still in play, but on the daily, we did break below an important level at $80. You got to let that thing play itself out and kind of navigate there, in my opinion. All right, last one here, market Skyline style. Let's take a peek at Bitcoin if we can. Crypto pressure a little bit the last week or so. There's no real specific catalyst or news. There's some chatter in the crypto markets about worrying about having to pay taxes on their profits. So good problem to have, kids, by the way, and adults. Nothing wrong with that. But Greg, we are under some pressure here the last 8 candles or so. What are you seeing here in Bitcoin?
Yeah, I don't really know what to say about it. Like you said, there's nothing specific here that's I think driving this necessarily. It had a pretty solid run as well, so not really surprised that it took a breather. I am a bit surprised that it's breaking. You had some serious support, resistance here and support here, so I'm kind of a bit surprised that it's breaking there. But hey, this is what it's a volatile asset, so not really too surprised at that. Kind of an M for murder pattern here. So again, all of these things not really surprising. Do I think Bitcoin is going to fall too much? I really personally don't think so. But you got to play the technicals too. I would say there's some support around that 52.5 there. That's really, I don't think I have much else to say about it. There's just nothing that I'm seeing from a sentimental standpoint to be driving it. So
if you want to find yourself in the loony bin faster than you can shake a stick, then just over leverage yourself into crypto assets and stare at your profits and losses every day. that will drive you mad. There's no doubt about it. It's a volatile mess. It's a volatile product. It always has been a volatile product. And until otherwise noted, and a lot of evidence, it's going to continue to be a volatile product. It doesn't surprise me at all to see a retracement. And by the way, the retracement here, 69K all the way back down to 57K in the course of a week and a half. That's Bitcoin. That's Bitcoin. Let's see how the 50-day moving average shakes out. And by the way, one ultimate level is like that 52 that you've drawn there. So I don't get worked up on short-term volatility with crypto, just the way I've approached it for the better part of it, the 7, 8, 9 years that I've been doing it. So say lot be. Moving on here, Greg, let's move into stock talk next. And we're going to end up starting first with Nvidia. So go ahead and give me that chart and kind of set this up a little bit. If you are out there and watching our program right now, Coach Tim Justice from Tackle Trading, we got a regular community that shows up each and every day on this show. That's our hashtag Team Tackle crew. We get together, we talk markets, get set up for the day, go out there and execute our trading systems together. And by the way, make sure you click that subscribe, click the bell and come and join us. And there's one thing I want you guys to be aware of on Monday. And Greg, I'll drop you a link in Slack at some point. We'll bring this up at the end of the show. But Monday night, 8:30 Eastern, we have a special webinar with Coach Matt on swing trading. The last one we did has already had thousands of views. The one he did a year ago, we have almost 100,000 views on the video. This is a topic that he is excellent at, something that you guys can absolutely learn from. Do not miss the event Monday night, 8:30 p.m. Eastern, right here on YouTube. Matt's going to be covering some swing trading principles and concepts, whatever is grabbed his attention right now. And that's an event that you do not want to miss. All right, Greg, let's talk Nvidia here. Price response first, obviously big gap out and on the daily chart. Nice little move there. Nvidia, let me give you the numbers here, Greg. $1.17 per share on the EPS against 7.1 billion in revenue. That beat the expectations of $1.10 and beat their expectations on their revenue of 6.8 billion. So they had a beat and a beat. They also raised their guidance, to $1.16 to $1.28, up from $1.08. So about a 10% raise in guidance there. Whatever a company does the hat trick, they beat, and they raise guidance, generally set up for good success as long as they don't mention supply chain, inflation, or any of those other keywords that the market hates right now. But what everybody's talking about with Nvidia is their upbeat forecast based on their participation with Facebook and some of the contracts they're going to have as they build out some of those metaverse type of principles and whatnot. Nvidia's got a nice response. It's been a juggernaut performer, huge company in the chip space. What is your read there on the chart for Nvidia?
Yeah, great breakout of this little mini flag pattern here. When you get the hat trick, as you talked about there, you're gonna get these massive moves. You're gonna get those big price movements. This is great. The only question that's left is does this keep going? Does it come back down? Find a level to kind of springboard off of for its next move. Obviously, you've got some fundamental and sentimental things going on with the Facebook deal. Nvidia's just been strong. Like, look at it; it's been strong for a while. So this is not new for them. Not really surprised after this monster run here. Oh, see if I can draw a line here. Really not surprised after this monster run that took a little bit of time off. Really great numbers there. The thing that I look at for this here, just from that jump there, is the weekly chart here. This is a pretty aggressive move upward. So wouldn't surprise me to see a little bit of sideways chop here. Actually, not surprising, but I think it would actually be constructive to get a little bit of sideways work here before it got that next leg up. But it seems like everything's lining up for another run here. Again, just my thought with the weekly chart there is it looks a little bit overcooked, but with those kind of numbers, hey, sentiment can drive it a long way.
Yeah, there's no doubt about that. And it's really impressive when you pull this thing back and you think about the year that Nvidia has had. This is not a $10 billion market cap company that doubled. This is a $800 billion market cap company at this point here, Greg, that in the last year has doubled. And in the last year and a half has even done more than that, pretty much gone from $50 a share up to where we are today. And by the way, they've had huge numbers, 60% growth. I'll read a couple of stats to you that grab my attention here. 60% earnings growth year over year for a company this size, Greg. 60% earnings growth, and we're not talking about coming from the depths of the pandemic. Nvidia actually was crushing it during the pandemic because everybody was at home buying new computers and upgrading their devices and all that kind of stuff. They were doing well last year. This isn't like one of those theme parks that didn't have anybody show up and now we're finally making money again. Nvidia has been explosive. They've been a juggernaut, and they're headed towards $1 trillion valuation. And I would not be surprised if we see that in the first quarter of 2022. And I know, we're stretched. Valuations are crazy, but you find me a chip company that's tripled in value that doesn't have those same sentiments, I'd be shocked as well. So I love what they're doing. I don't know if there's a short-term actionable item here. I don't see anything specifically. That candle kind of blows up any kind of momentum trade for me personally, but I love it. I think it's got to be on a watch list. It's a fundamentally sound company, and they got a lot of really strong themes behind it, in my opinion. All right, let's keep flashing. Let's go to Cisco next if we can here, Greg. CSCO, we kind of referenced them earlier. Obviously, Cisco, the Dow component, they're up nicely over the course of the last quarter, but they gave up most of that here in the gap down here today. They missed on their earnings report. Raw numbers, 82 cents EPS on 12.9 billion in revenue. They actually beat the EPS, but they missed the revenue expectation. They also warned of supply chain problems, Greg. And this is where, when you get into the conference calls, when you get into the commentary, markets can really punish somebody if they start painting a gloomy picture. And this is the way markets work. Gap down there on Cisco. It's a stay away for me. What do you see in there in the chart?
Yeah, that's an ugly drop there, a very ugly drop. Now, the only saving grace there is if you happen to be a position trader, you can see where I drew this line back here. Pretty important level of support back there, right around that 52, 52 and a half. So, if you're a position trader and you wanted to see this kind of, confirm back to the upside, it might be a bargain that way. But yeah, they can't, Matt's talked about this on the halftime report, pretty much all the time. You start missing in any way, shape, or forms during this earnings season, you're going to get punished. You start talking about, start front running potential problems for the next earnings season, you're going to get punished, and that's exactly what we've seen this over and over and over again, and we're still seeing it here today. So yeah, it's I don't think there's a trade right now, definitely on this. But you got to beat. You just got to beat, and they just didn't. So, I don't think fundamentally too much has changed with the company. I'd have to look at it to be sure of that.
Well,
But
when you're a tight margin dividend paying company, these type of companies, when you have margin compression and margin pressure, that's a problem. I mean, that affects your ROEs, it affects your price to sales, affects all the fundamental metrics as to why the people who invest in a company like Cisco invest in a company like Cisco. And they had some pretty direct things to say about their profit margins next year based on supply chain problems. And that's the kicker right there. If you bring up supply chain, or if you bring up those bottlenecks, or you bring up inflation, and you didn't beat on everything else and blow it out, the market's going to punish you. They're punishing Cisco here today. That's the way I'm seeing this one. A couple other ones real quick here. Actually, let's go to Chinese tech next if we can. Alibaba, they reported their Q2 earnings here, and obviously, a very, very big company, very popular company, but it's been under pressure like much of the FXI and Chinese, publicly traded companies have been this year, for all of the obvious storylines we've been covering here on the halftime report. Alibaba reported earnings of $1.74 against $1.87, so they missed. 31 billion in revenue, missed against the 32 billion expectation. They did grow revenue year over year, but you cannot miss in this environment, in a downtrend, and be the biggest Chinese retailer on the planet and not get punished. The market is punishing it here today. Greg, what's your read on that gap down in a downtrend?
Yeah, well, that's the thing, right? You guys can see this line. I've had this line drawn here for months and months and months, and it really never showed anything to me that was going to change my mind about being, bearish or bullish. And in this respect, it just kind of affirms that the things are not all right in this particular company. So not really surprised that they missed out a little bit there. Really, I don't think there's anything to do here except look for a breakdown here, and breakdown below that low might present an opportunity to trade. But from a bullish perspective, I just don't see anything. They've got to show you something, right? It's part of trading is using your eyes, and I just don't see anything here. So
if you got a low base and you broke below 138.43 and you had a nice trigger, let's say 2 weeks from now, I'm not going to fault somebody 100%, but that's not going to be a trade I take. Somebody else can fight those storylines that are happening, the random news that could pop stocks from China back and forth. It's kind of just to stay away from me. And I like the company Alibaba. I believe long-term, if we can get some better sentiment and themes around what's happening with the, the markets in China, I think Baba could be a buy at some point. But as of right now, a lot of weakness, a lot of negativity, and that's where it is. All right, moving on here, one quick Tackle 25 company, and also north of the border, one of our companies from up there in Canada that we love to track, Canadian Solar, Csiq, if we can. I'm very interested in the sector and the space here recently. It's been volatile, and Greg, obviously that's a little bit back and forth there, but I'm seeing potentially a breakout here. Let me give you some raw numbers. 42 cents EPS against 18 cents. They blew that out of the water, no doubt about it. They did 1.2 billion in revenue against 1.3 expectations. So they had a beat, but they had a miss. And then their guidance was in line with what their future guidance expectations were. So kind of a mixed report, and quite frankly, kind of a mixed price response as well. It kind of makes sense to me today, Greg, but I'm still interested in the breakout. What is your read there on Csiq?
Well, it was a mixed bag report. Well, guess what? You're getting mixed bag response, right? So I think it's holding true to form here. I really don't think there's a lot to do here until we get above that 42 and a half. For me, that's my breakout level. Then you're looking at kind of a head and shoulders, inverted head and shoulders pattern here. You could even make the case of a cup and handle here. So yeah, the price response hasn't been enough to push up against that, but I still think you want this on your radar. Even with the mixed bag, I think the space is pretty popular. There's a lot of talk about solar and EV and things like that. Yeah, this one's been very neutral for a long time now. Can it get back to kind of its former glory here? Well, the only way it can do that is to start breaking some levels. And right now, that level for me is 42.5. If it can break that, then I could be convinced to get into a trade. You get up to say 46.5, 47. If you get beyond that, you're looking over 50. So there's definitely a trade potential here, but it's still not gotten it done yet. And again, mixed bag, mixed response. Just be patient.
Yeah, I agree. One company that is not being patient with its price response, though, is in the retail space. Let's move on. A couple more I want to talk about, and they are in retail, and so much strength in the sector here today. Obviously, Macy's, a very popular department store. Most people, have at least shopped at a Macy's, know who Macy's is, right? High base breakout on earnings, no sell day on the candle. We're up 21%, and for a pretty good reason here, Greg. They blew out the expectations. There's no doubt about it. They raised their full year outlook on their guidance as well. Here's the numbers: $1.23 EPS against 35 cents. They almost quadrupled their EPS expectations. 5.4 billion in revenue against 5.1 billion expectations. So they did narrowly beat there, but they raised their guidance big, Greg. They did expect 341 for next year EPS. Now they're expecting 457. So almost like a 25% raise in guidance. That's one of the reasons why you're having such a strong price response here today. Macy's, no sell day. Talk about that chart for just a minute if you can.
Yeah, wow. That's the only response I've got for it. Really high basing here. If you hadn't been paying attention to this, you might have got an opportunity to get in here if you had your order already in, or potentially 2 days ago, this thing actually broke out. So if you were looking at this, you might have got in above that 32 level. If you did, you're probably really happy right now. Yeah, I don't think you can argue with that. Like, wow, like those numbers are just astronomical. It's a great price response for some great numbers, like 21, 22% is fantastic. But really, this should have been on your radar probably back here, right? Pops up, bases, pops up, bases, pops up, bases. It's almost got a personality like that, basically starting back in August there. So if it hadn't been on your radar, perhaps it should be now. Yeah, I love this. Obviously we've missed the pop here. I don't think I'm front running it up there, but this could develop into a really nice trade with a little bit of work here. So
I agree. From one big box retailer to another one here, look at Kohl's next. I mean, we had another blowout report here on the retail side today. And as we're heading into the Christmas season, retail is an interesting concept to me. I saw Amazon doing so good today here, obviously. We see Macy's blow the doors out and also raise their guidance. Kohl's had a nice response. It wasn't as good as Macy's, obviously, but we are attempting a breakout here. We're up 7%. Kohl's, let me give you the numbers here: $1.65 against 69 cents. 4.6 billion revenue against 4.3 billion. They raised their guidance up to 710, up from 580. So a beat, and a beat. Another hat trick here, Greg, and reversal characteristics, almost a little bit of an inverted head and shoulders, but let's not go too crazy on that right now. It's more just about pivot relationships developing, nice little breakout. We got $65 to contend with back there left of the chart. But what I'm most interested in is not really Kohl's itself. It's the fact that I just saw two big box retailers that have been in and out of favor for years, depending on the market condition. Right now, Greg, feels like they're flowing back into favor, and retail is in focus today. What's your read on the retail sector? Kohl's response as well.
Yeah, so Kohl's, obviously not as gangbusters as Macy's. But a good response nonetheless. Nice little breakout here. Again, this could have been on your radar if this was something you watched. You got a double top here, so potentially this was a trade. It might have been a little bit tougher because of the pullback here, but really good response today. The way I look at this is similar to the way you look at it. I don't know that I'm necessarily going to trade Kohl's right now, just because it's real close to that 65. But when you start talking retail, you start going to the XRT here. Look at this thing. This thing is
Mhm.
pretty as a picture, right? Little high base here that broke out. Now we're high basing again. We've got a nice 104 level here for a breakout. So, if you wanted to get involved in the space and you kind of missed those earnings there, I don't think it's necessarily too late for this ETF here. It's running, and really, why would you not want to be on top of it, right? So I think there's options here for trades. If you've missed, like you said, the gangbuster earnings that we're seeing. Also, if you start thinking about, we're getting end of the year, are we going to get that Santa Claus rally? Is the space going to get a little bit more of a boost? Like you said, potential trade here on XRT.
Yeah, and you trade the XRT. Take a look at RTH if you can. I think they're both fine, by the way. They just have different compositions. RTH has the Amazon in there with the Home Depot and the Lowe's. XRT does not. So if you're wondering, when you look at different holdings, and they might both say retail in the name of the ETF, one pro tip that I work with whenever I'm working with like a coaching student, it's really good to know what the top 10 holdings are of any ETF that you trade, right? Because then you'll have some context as to why it's doing what it's doing. This one has a few more of the Amazon, the online stuff as well, where the other one's more of the traditional, kind of brick and mortar type retail location. So both looking interesting. Retail should be on people's radar heading into the holiday season, in my opinion. Greg, you agree?
100%. Yeah.
All right. Very good. Guys, that is Stock Talk here today, segment where we go through the individual company news out there in the market, things that are happening, that's grabbing our attention, earnings roundup, you name it. Now we're going to be moving into our last segment, which is going to be fundamental focus. And couple months ago, I can't remember exactly what day it was, Greg, but it was at least a couple of months ago, we started doing this segment here on the Halftime Report where you would take a fundamental concept, you would deep dive into it, you would explain how you use it, what it's there for investors and traders, and do some education. And one of the reasons why you focus on that is that this is a field and an area of investing and trading that you have a passion for, that you've spent a lot of time over the last 15 years, kind of looking at and researching and studying. What do you got lined up for us today in fundamental focus?
Yeah, so last week, sorry, not last week, week before last there, I brought a couple concepts to the radar of folks, fundamental concepts. Market cap and enterprise value was something I talked about. And the reason I kind of dipped our toe in the water back then is because when you start to understand how those two different things work and how they relate to valuing stocks, which is really what fundamental analysis breaks down to. There's only a couple components as far as I'm concerned to fundamental analysis. There's valuation and there's safety or security, whatever you want to call it. So those two factions are, if I buy something, how safe is it, right? How can I hold it? It's longer than a swing trade. It's, position of trade or an investment, right? If it's got some security, and we've went through a few of those metrics, and we're going to continue to do so on this segment, that's one thing. But then you have to ask yourself, okay, if I go to buy this safety, if I go buy this particular item, am I getting a good deal on it, or am I overpaying for it? This is where these metrics start to come down to. 2 weeks ago, I used the metric or the image, I guess, of looking under the hood of a company, right? So saying, okay, we know Apple, right? Apple's a $2.5 trillion company. It's a massive company. Well, what do we really know about it, right? We know it's at $155 a share or right thereabouts, you know what I mean? But what does that mean to us? Well, this is where fundamental analysis can come in, and it can help us where we can determine, okay, is Apple a bargain at $1.55, or, should I wait for a retracement, and get it at a better price or a better deal? These kinds of metrics is where we start to put this stuff together. And the thing about fundamental analysis is there are as many metrics out there, fundamentally speaking, as you can shake a stick at. And I'm not even joking there. There's tons of them, right? So what I've kind of done in my career, when I started out as an investor long before I was a trader, I've tried to start to break things down to say, okay, how can I look objectively? Some of it subjectively, but how can I look objectively at a couple different companies and say, okay, one is better, better bargain than the other. It's no different if I go to buy a car, right? Am I going to buy a Chevy truck, or am I going to buy a Ford truck, or am I going to buy a Dodge truck, right? You're going to compare those different things, even though they're the same kind of product. Well, this is what we're going to use fundamental analysis. So this week, I've got something called enterprise value over revenue. So I'll get to that in 1 minute, and I'm just going to give a quick recap of the market cap and enterprise value, because you got to kind of understand those two before we can start looking into this third one here. So market cap, it's just the size of a company based on its share price and its number of outstanding shares. So it's a very simple metric. You take the number of outstanding shares, you take the price, you multiply that together, that gives you your market cap. Well, what does that really tell you? Well, it tells you the size of the company. Now, does size matter? That depends on who you ask, but yes, I would say size matters. Size matters for kind of the security potential of a company, right? Apple's a $2.5 trillion company. Even if things go bad, in the markets, I think Apple's going to be okay. So that size does kind of matter there. But does that give us enough information, or does it give us a comprehensive look at what Apple means to us? It really doesn't. And this is where our friend enterprise value pops in. Okay. Enterprise value is just the total value of a company, just like market cap is, only it takes into consideration short and long-term debts and any cash on the balance sheet. So it takes that company and it says, okay, you've got this size, but what else you got? You've got some debt in there. Okay, that's gonna hinder it. You've got some cash on the balance sheet, that's gonna help it. So now you can get a better, more comprehensive look at what a company looks at overall. And why do you want to look at this stuff? Well, again, you're just trying to compare. Is it undervalued? Is it overvalued? Is it fair value? Like, really, that's all we ever want. You think about Uncle Warren Buffett there. His mode, or his thesis is, I want to buy a great company at fair value, right? And I don't know if he used those exact words, but it's basically saying, I want a great company and I want to pay a fair price for it. Well, this is what we're going to do when we start to put all these metrics together, is we're going to see, is this a fair price that we're paying? So, like I said, enterprise value gives you a little more tuned in kind of metric, but that's not the end all be all either. Now we have to start comparing that enterprise value against other things to see if there's merit to it. Okay, so let's talk about enterprise value over revenue. Why do we want to talk about that? First of all, let's go through the why before we go through the how. Okay, so the why. Well, why do we want to do that? It's because some companies, what if they're not yet making a profit, or what if they're not generating income as of yet? Maybe there's a bit of a growth component to them, right? So an example was Tesla. Okay, Tesla 4 or 5 years ago, I can't remember exactly when, they weren't making any money. They were actually losing money on each of the cars they produced. But there was a very big growth component to that. They were still bringing in revenue. They just didn't have that profit and that income yet. Well, that doesn't mean they're a bad company. That means we got to look at a different metric potentially to see if it's a value for us. Well, one of the ways we can do that is we can look at enterprise value. We can compare it to the revenue, and we take that of two different companies, and that gives us a multiple, or what we call a ratio. Now, ratios, when we start to look at them, we want to look at them and say, okay, if it's a lower value, then potentially that stock is undervalued, because what it's comparing is that share price with the debt and the cash all worked in there versus the outstanding number of shares. That's your EV, right? So it compares that and it says, okay, this size of company, this particular company makes X number of dollars, right? Well, when you take that into consideration, you're going to have a number, and that number is either going to be low or it's going to be high. But what does that mean to us? It only means something if you're comparing it to another company of similar value. Okay, and so I'm going to give you that metric in a minute. But the reason we're using it is because we want to figure out if it's overpriced or underpriced. Okay, now, this metric that I'm talking about today, this is actually used a lot when you have other companies acquiring companies. Okay, so one of the metrics that they look at. So if a company looks at it and says, okay, that company's undervalued, if they use this metric, could that work for us as an individual investor? I absolutely think it could, because it's one of the things that I look at, right? I want to know. And now it's not a standalone, I should have prefaced this earlier. It's not a standalone metric. You can't just look at it and go, okay, well, yeah, it's undervalued, so I'm going to go buy it. There's other things, but that's what we're going to do in this series. We're going to continue to build up, brick by brick on these particular metrics so that we can get a good overall picture of a company versus another company of the same type. Okay. So that's kind of the why. Now, what's the how, I guess? Well, basically, again, I kind of went through it there, but it's a measure value of the stock divided by its revenue. That's all it is, and it's going to give us a number. Okay, so let's kind of look at. I'm going to go to Yahoo Finance here. Okay, so if you go to Yahoo Finance, I'm gonna actually do this. I'm gonna do this all over so you guys can see how I got here. Okay, so I go to yahoo.com. This takes me to the Canadian version. If you don't get to the same metrics as I got, you'll see that says ca.yahoo. It's a little bit different the way they do Yahoo, but you can always get there. So you click on finance there. And now I'm going to use Coke and Pepsi. That's kind of what we've been comparing for a while here. So I'm going to throw in my Coke symbol here, and it's going to give me a bunch of metrics, okay? Market cap, it gives us right off the hop. All of this is kind of like a Cole's Notes version. I actually want to dig a little bit deeper here, so I like to go into statistics here. Okay, so we talked about market cap and enterprise value. So market cap for Coca-Cola is 241 billion. Their enterprise value is 268 billion. So what that means to me, as we talked about a couple of weeks ago, is maybe they've got some more cash on the balance sheet, or they've got less debts, things like that. This actually is nice to see where this number is bigger than that market cap number. This gives us a little bit of a, okay, this company's kind of got its affairs in order, so to speak. But that doesn't tell us the whole story. Okay. Now, if we look down a little bit further, you'll see enterprise divided by revenue here. Now it's 7.10. Remember, that's a metric, that's a ratio or a multiple, if you will. Okay, so if you think of it as a multiple, the enterprise value is 7 times what the revenue is. Okay, so just think of it as a multiple that way. Well, what does that mean? Well, it really doesn't mean that much by itself, but if we go and compare it to, let's say, Pepsi, company in the same space, now we can go and we can compare it here, and we can say, okay, enterprise value 3.39. So even though Pepsi is a more expensive stock, right, per share, we can see that the lower value here, right, this is a multiple. The lower value here is actually undervalued or potentially a bargain. Now, again, we can't just leave it all at that. We've got to add these things in, but you can see also here, market cap, and we got a higher enterprise value. So we've got similar things that we can compare here. And just looking at this one metric, one could say, okay, Pepsi looks a little bit more attractive from a bargain standpoint here, even though, like I said, this is a $162 stock and Coca-Cola was 56, I think 55, 56. So just this metric here is just one way that we're going to compare things. We're going to use other things like, EPS and, earnings per share, all those kinds of things. But right now, I just wanted to introduce you to enterprise value because I've got a bunch more enterprise over EBITDA, we're going to talk about next week. And I've got a bunch of other metrics where this enterprise and market cap really opens it up for us to do a deep dive into our fundamental analysis. So if you're looking to compare a couple of different things, enterprise over revenue is a good way to do it. And again, it especially is helpful if you have companies that don't yet make profits and whatnot, because it will give you an indication of value regardless of those metrics there.
Greg, I really thoroughly enjoy these, and I'll tell you for a couple of different reasons. Number one, as somebody who's been in this industry for 16 years, I think fundamental analysis is grossly underrepresented and underappreciated, quite frankly. I know that in our company, the coaches really do value fundamentals. And Coach Matt puts so much time into the Tackle 25 every year, really anchoring it to fundamentals. You are a very, very big value guy, dividend driver, all that kind of stuff. Fundamentals are something that are at the core of your focus. Value analysis is the core Coach Mark's focus as well. So I'm very happy that our community gets access to some of this kind of education and content, because quite frankly, a lot of companies just do not teach this type of stuff. So number one, thank you for doing it. Number two, enterprise value is not something I've looked at myself that often, so I'm learning as well here, Greg. And I do just want to say thank you. And I appreciate you bringing some of your wisdom, some of your experience, some of your knowledge around fundamentals to our community here and getting us up to speed on them. Okay.
Awesome.
That's number one. Number two, I dropped you a link in Zoom and in Slack. You can find it either location, bring it up. It's going to be the last thing we promote here today. And by the way, great conversation today. Love seeing all the names in chat. Hashtag Team Tackle as always. And if you've not done it yet, thumbs up, subscribe, and click the bell. But the big thing I do want to talk about is Monday night. And, go to tackletrading.com, number one, Greg, but also go to that link I sent you, number two. And I'm going to show people how to get to the event, how to find the event, and how to attend the event. Monday night, 8:30 p.m. Eastern. Coach Matt Justice, the architect of the STEP system, my brother, my business partner, and a wonderful technician and educator when it comes to technical analysis, one of the best you will ever meet in your entire life. He's going to be doing a webinar here on YouTube, 8:30 Eastern, on swing trading. And it will depend on what markets are doing, I'm sure, as to which stocks he highlights and all that kind of stuff, but he's going to focus on swing trading on Monday night's webinar. When you get to this page, and I'll drop this link in the chat right now, all you got to do, you see that little button on the bottom left there, Greg? If you click that, and actually I just dropped that in the wrong chat, but if you click that, you set the reminder, it will put a bell on your computer to let you know when we do go live on the event. You can also bookmark the page if that's an easier way for you to find it. So where it says set reminder right in the middle of the video, where it says live in 4 days, go to left right there, boom. You click that bell. When that bell lights up white, you have the reminder on. If you head to tackletrading.com, there was also Coach Tyler has been writing a few blogs this week in the Tackle Today regarding swing trading and kind of referencing the event. It will give you all kinds of information. If you cannot find that link on YouTube or did not set the reminder or whatever reason, you can find any of our stuff right on the events page at Tackle Trading, but even the Tackle Today. Just click on the Tackle Today there, Greg, if you can. And how, let's see here. That's the Trade Center. Might just be a little slow. The latest blog we had on swing trading, Coach Tyler drops the link in there. He also has some content on it, kind of gives you guys some ideas as to what we're going to be covering. Make sure you do not miss this event. Monday night, I'll be sending an email tomorrow with some information about it. I'll send a reminder email on Monday as well. But guys, I want to see you there. We're going to have a lot of fun. It's going to be a big one. And by the way, Team Tackle, you guys who are veterans know this. This is when we put our education on discount for the holiday. Okay. And we're going to be putting some things on discount, some of our systems, our annual pro membership, and even our one-on-one coaching program, Greg, which we're expanding and I'm in charge of. So I'm very excited about the event. I'm very excited about our holiday sale. And if anybody out there ever wants to chat with one of us about those educational programs or get ready, or maybe you can't attend the event on Monday, but you're interested in some of that education, just book a 30-minute consultation with us over in the coaching department. I just dropped a link, tacklecoaching.youcanbookme.com, and you can just come and have a conversation for 30 minutes. I'm happy to chat with you, see where you're at, see how we can help you move forward. Greg, that is it for today. Any final thoughts on the market before we wrap this whole show up?
No, I think the market's been pretty resilient, and until we see different, go with the flow is all I can say about that.
I agree. Go with the flow. Go with the flow. Build a plan. Let's get ready. So if these things happen, we've got something we can do with it. And I would go review some of those options report. By the way, there were some really, really interesting candidates, both bull and bear, from over the weekend. Some that grabbed my attention on the stock and options report. Look at CVE real quick. Just highlight a couple of companies. Nice little retracement back into the moving averages, triggering here today. ROK, Rockwell Automation. These were two from the report you did over the weekend. Actually, I think Coach Frank did this when you did commodities last weekend. ROK pushing for a breakout, 345, looking healthy, looking good. Even some bears. Look at Twitter from the options report. If you're looking for a bear to play, there's always good candidates on those pick lists. And man, that thing broke down and sold off. So update your watch list. Spend some time on those reports over the next day or so, and then we'll have some new updated list over the weekend for you guys, as always. That's our show here today. Have a wonderful rest of your Thursday, guys. We are out. We'll see you back tomorrow. Coach Frank, Coach Matt will both be here for our last day of the week here on the Halftime Report. And you're right, Marie. I love the fact that I was your mentor and got you set up to actually do this stuff the right way. Education is the most valuable thing you can do in life, in my opinion. If you really want to be a trader, you need to commit to it. you need to commit to it and actually get trained on this stuff. So come and join us, have a conversation. I dropped the booking link if you want to talk to me about education or coaching or whatever it might be. I would love to talk to you, quite frankly. So